Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. I'd like to offer you some foreign exchange charts today, and the first one I'd like to try out is the euro against the dollar. Okay, down to the 118.08 level yesterday, 3 ticks away from reaching target X. This is the target for the action over 2021, so far being a sort of halfway hesitation. Anyway, it was a second bearish black crow and a suitable follow-on low to the previous session's immediate countering bearish engulfing pattern. It was also the second consecutive close below the long moving average, currently 118.71. The seemingly lightweight, lesser Fibonacci congestion at 118.97 and 87. The significant June 2018 high at 118.51. And finally, the middle time of the 2021 bearish Andrews pitchfork, currently 118.61. There may be some consolidation now around this area. However, as I've already mentioned, there is the idea that the last 3-4 weeks have been a possible bear flag in formation. Enough that I've provisionally put targets X1 at 117.05 and X2 at 116.15 as an initial and final target for such a move. It is time to see what supports are below though. We have the congestion from August to November last year. We're in that now, and a significant amount stretches down to the 50% Fibonacci line at 117.58 from the big June 2020 to January 2021 move. So far today, a dip lower, enough that target X at 118.05 has been achieved, but not that much more. The next chart to look at is cable, aka sterling against the US dollar. A second bearish black crow and a suitable follow-on to the previous session's bearish black Maribozo. It was also the second consecutive close below the combination of the rising short-medium moving average, currently at 138.12, and its partner, the start of November 2020 to date uptrend, currently at 138.19. The market has started to work its way down through the previously highlighted congestion in the 137.5 to 136.5 area, dating from the turn of January into February. However, the next significant support would be the rising medium moving average, currently 136.27. Below that, we have the supremely important lower time, currently 135.69 of the late June, late September 2020 bullish shift pitchfork. This lower time, along with the middle time above, currently at 140.28, have given the bullish angle of attack of this market since September last year. So far today, a limited attempt lower, tentatively approaching the interesting 61.8% Fibonacci level of the whole of the 2016 move at 136.54. The next chart to look at is euro against sterling. All still a little tense here now. A fourth bullish white soldier yesterday and a second close up and outside the descending triangle, closing over the downtrend, currently 85.89, though not really breaking higher into new ground. This break upwards is still not verified in my mind. We still have the original 3 targets below. X2 for the second quarter of 2020 head and shoulders top, that's in the 85.15 area. X1 in the 84.75 area, the target for the recent sideways triangle. And finally, a possible target X3 in the 84.5 area for the recent descending triangle pattern. We also now have target X4 above, the target of a possible break upwards of the descending triangle. That is in the 87.15 area. So far today, a further consolidation within yesterday's levels. Market seemingly based on an old congestion in the 86.17 area. Overhead, we have the April 2020 low at 86.69, then nothing until target X4 area. The next target to look at is the US dollar against the Indian rupee. A second bullish white soldier yesterday, but really it was a higher yet still indecisive spinning top. I suppose in part you could call it a follow-on to the previous session's combination of a key reversal up, a bullish engulfing pattern, and a bullish closing white Maribozo as well. The topside was limited by the 50% Fibonacci line of the July 2019 to April 2020 move at 72.64 and the middle time, currently 72.69, of the October 2020 to February 2021 bearish Andrews pitchfork. The former on a closing basis only though. Significantly, it was a second consecutive close over the downtrend, currently 72.27, of the original descending triangle. That seems to have morphed into a falling wedge pattern. We have a preliminary topside target X2 for the falling wedge pattern in the 72.60 area. This would only be good if the break higher is not, repeat, not a false break. So far today, a limited try higher, over the 50% Fibonacci line and the middle time, but struggling to stay up there. Seems the middle time is providing significant resistance. Beyond the time, we have the declining short-medium moving average, currently 72.86. Well, that about wraps it up. So in the meantime, good trading and stay safe in the markets and in real life.